All right, everybody, welcome. Appreciate everyone coming on today. We got our boy Andre back from edgeful.com. Andre, thanks so much for coming again, man. How you doing?
Great. Thank you for having me. Very excited. Coming with a lot of updates. So I'm sure we're going to get good use out of the time that we're on the phone here. So thank you
Awesome.
again.
Yeah, our pleasure, man. Really liked the software. Enjoyed the first session we did. So you guys could always go back and watch that. We have the recording in the Discord room. Um, yeah, looking forward to see what updates you guys got going on. So just take it over, Andre.
Perfect. So I'll just quickly, as a reminder for everyone, go through the site kind of top to bottom, show you how everything is laid out, show you kind of touch on some of the new things that we added, and then I'll go into some of the new reports and some of the new features specifically. So up here, we have added crypto. I imagine that not a lot of you are crypto traders, but we've added crypto. And sorry, just one second. I just want to make sure my phone is muted. Sorry about that. Perfect. So we've added crypto. I imagine not a lot of you are crypto traders. We are, for the sake of this conversation, we're going to be focusing on futures. So right now I have futures. One thing that we added recently is this indicator idea. So we have a suite of TradingView indicators that we offer. So here are all custom indicators that we have built. If you have an idea for one that we don't currently have, you can request an idea here. You can send us an email and you can put in, this is what I want to see. This is the concept, etc. We also have the ability to request a report. So if we have, at this point, we have 90 plus reports. If there is something in here that we don't have that you want or something that you look at, you click this button, tell us what you want, and then we'll get it built for you. Then here is your nav bar. This is your steering wheel for the entire site. This is how you do literally everything. In this case, we have three report types. We have price action, volume, and indicators. We recently added the ability to favorite certain reports. We also recently added because we have such a big library of reports now, we've broken them out into scalper, day trader, and swing trader. So now you can see if you go to the scalper category, you can see all of the scalper reports that we have. And if you go to swing trader, you can now see all the swing trading reports that we have. So this is like a way to make the reports a little more bite-sized and a little more specific to you and your trading style. So this is the nav bar. Then finally with futures, we have the session selector and we added a custom session creator. So in this case, it would look like this. And if, let's say you trade, hypothetically, you want to trade a New York early session, you would do New York early, change your start time, and then now you have custom sessions right here. So that's something else that we added that has been a huge hit among our users, the custom sessions. I highly recommend playing with this. If you want to look at the overlap of London and New York, you can do that. If you want to change your New York session, you can do that. If you want to change your London session, you can do as many as you want. Then if you see these little bubbles here, these are sub-reports or like just variants of the report you're looking at. So we're on the gap fill report here, and we have a few variants. Then we always have a visual representation of the report, always a table representation. This is a customization that I'm going to talk about in a little bit. This is another massive thing that we added right here. We have the explainer graphics here. So this is always related to the reports you're looking at. So a gap up, a gap down, a gap up that gets filled, etc. This is some more information on what a gap is. This is where you actually request access to TradingView indicators. So in this case, I put in my TradingView username. Very important for me to say this is your TradingView username. So the way that you find that is you go right here, you click on the button on the top left, and that is going to be mine in this case. So Edgeful is mine. You will have a different one. It is not the email that you use to sign up to Edgeful. It is your TradingView username. That's how we assign the access. Then we have some explainer text here, telling you what is this report measuring, how do I use it? And this is another very big update that we added, which is the breakdown of the actual results of the reports and a price chart that's connected to it. So in this case, there is 141 gaps up in the last year, 116 gaps down. And what you could see is this table actually breaks down each day. So you can sort this, you can filter it, you can do whatever you want, and then you can also click, and then it will bring up the price chart from that day so you can see the price action from that specific day. Finally, we have the videos. So highly recommend watching these videos. It will explain exactly what the report is measuring, what it's using, how to use it, and it'll just be 2 minutes or 3 minutes max for the most part. So it's definitely worth watching them. I highly recommend it, especially if you're not more of like the reader type, that we always have video for all the reports.
Wow.
That is the layout, how everything works. It's very simple. We do it on purpose because we want to maintain your focus on what's important. We don't want the bells and whistles. We don't want you to be distracted. We just want you to focus on the edge. So any questions before I go into some of the new reports, some of the more popular reports, and some of my favorite things? I'll
Uh,
keep
no
going.
questions, but just a quick comment. This is really
Yeah.
well laid out. I've been using trading software and software since 1993. So it's really nice the way you guys have laid it out. It's simple, it's easy to use. The explanations are there.
Yeah.
You don't have to, it's really well done. Just, okay, go ahead. Sorry, had to
No,
interrupt.
no, I appreciate it. Thank you. And the simplicity. So for those of you who don't know my background, I mentioned it last time, but my background is in finance and accounting. I worked at a hedge fund in Boston called Weiss Asset Management. Then I was an analyst at Goldman Sachs for 2.5 years. I started to trade, and just to kind of touch on the interface that we have is I was looking for something like this when I started to trade, and I couldn't find it. So that's the reason that this was built. But more importantly, when I was searching for something like this, I came across a lot of different tools. A lot of them are amazing tools in terms of their capabilities, but their interfaces are very complicated to use, very jargon intensive, they're not very intuitive. They're not very easy on the eyes. It's just there's a very big learning curve. They look like they're from 1995, honestly. And that is something I wanted to make sure that we don't have that same vibe and like that same interface and the same brand positioning, because the data doesn't have to be complicated, and the platform doesn't have to look complicated for you to be able to make money from it. So
Hmm.
I appreciate your comments.
Oh,
It means a
it's
lot because
beautiful.
we hold that very highly.
It's beautiful because I'm a person who doesn't keep stats, just because I don't have the discipline to do it. This
Yeah.
way to do it is so simply laid out that, how they say that even the village idiot can do it, and that's me. So it's that's perfect. It's just beautiful. And then the explanations with the videos, it's really well done.
Yeah, thank
Yeah.
you.
Anyway,
Thank you,
I'll
thank you. It means a lot because this is something we put an incredible amount of time into. And if there's something in here that, if there's an idea that we have that we can't figure out how to lay it out in an easy and intuitive manner, we actually will push it off until we can figure out how to lay it out in a, so our users can actually like grasp onto it quickly. It's more important for us that we add things in that are more thought out than for us to just like spam more ideas and just throw more stuff at the wall to have more features. We want to have our features be more thought out. So we want to make sure that they're laid out in a way that's intuitive. So I appreciate that a lot.
Hey,
Going
Andre, we
into,
do. Hey,
yeah,
sorry. We do have a question in the chat.
sure, perfect.
He's asking if you could go over how to get the indicators on TV again.
Perfect. Yes, absolutely. So within any report, so any of these, it doesn't matter which one you're in, there will always be a button here that will say Trading View Indicators. Just look for this Trading View logo. Some of these might be in a different orientation. So just look for the one that says Trading View Indicators. Then click Get Access Now. And then in this case, you want to put in your Trading View username. So I will go back to my Trading View now. I'm in my Trading View. And now on the top left here, this little button, this little profile button, I want to click on that right here. You can see Edgeful. This is my Trading View username. So if I click on profile, I mean, you can do this here too. Mine is right here. This is my Trading View username. So this is the one that you want to make sure you put in right here. It's not going to be the same. It's not an email address, so it's not going to be what you use to sign up to Edgeful, but that is how you find it. It's just whatever you have right here. Does that make sense? Just want to make sure that that's
Yes, he
covered.
says. Yeah, he said thank you.
Perfect. Okay, great. So,
And just another question we got. And
yeah.
this is I was curious for myself as well. He's asking about Bitcoin. So I'm assuming this would fall into the crypto. Do you want, I guess, Andre, just quickly go over what you guys offer here for crypto?
Yeah, so we unfortunately are not going to be offering the meme coins. So only the larger the larger cap coins. So Bitcoin, ETH. Now this one is ETH to BTC. So all these are all BTC to USD, just to make that very clear. This one is ETH to BTC. We have Doge, XRP, Solana, Chainlink, Litecoin, and these are the ones that we have. So you can go through and look at all the reports that we have, like on crypto, it doesn't matter. The one thing that's really important, and this applies to futures as well. So we do have Bitcoin, just so you know, if that answers your question. And I'm going to touch on the sessions, which is very, very important. And it's important for crypto, it's important for Forex, it's important for futures. So I'm just going to switch back to futures here. And I'm going to touch on what this session selector means. So here, I'm in my trading view. I'm going to go to my indicators. I'm going to go to invite only, which is where your Edgeful indicators are going to appear. And I'm going to click on market sessions. This one right here, market sessions. If you're a futures trader, I recommend having this on your charts. I actually don't recommend ever taking it off, and I'll show you why. So here, you can see that it's highlighting. Let me just switch to a 30-minute here. You can see that it highlights the high and the low and the start and the end of each session. Very importantly, these are customizable. So what I want to do is I go into the settings right here. I'm going to uncheck Tokyo, uncheck London, and I can also change my start and end times of New York. But here you can see these blue boxes. These are the New York sessions, and we're looking at ES here. So very importantly, when you are looking at the New York session, when you have in Edgeful, when you're looking at this New York session, 9:30 to 4, you are looking exclusively at the data within these boxes. You're ignoring the data between the New York sessions. So very important. This applies to Bitcoin. This applies to any instrument that trades on sessions outside. So pretty much everything except stocks, because they trade regular trading hours and then extended hours. So when you're looking at futures, you want to make sure that you are paying attention to what session you're on, because all the data changes based on the session, because your start and end times are based on the session that you have. Does that make sense?
I think so. I think it's clear.
Perfect.
For
I'm
me,
gonna
for sure.
go
Yeah.
through some examples too, just so you know, so it's not, so everyone knows. I'll actually go through an example now, specific to the gap fill. I want to make sure I address the question about Bitcoin. Did I talk about that? Did I address that we have it? Everything is good there?
Yep. He was just asking about it. In general. Yep.
Perfect. Okay. So now we're looking at the gap fill report. We're looking at ES. We're looking at the New York session. And we're looking at the trailing 1 year. So here, a gap fill. In this case, we're looking at futures. The gap fill is always from the previous day's closing price, which is right here. So I just marked out the previous day's close, and now the previous day, meaning the previous New York session, because I'm looking at the New York sessions exclusively. So I mark out previous session's close. Now I'm going to this session's open, which is right here. And now you can see that we have a gap up here because price went up overnight and it opened higher than the previous close. So that falls into this category here, gap up. 62% of the time in the last year, price has come down to touch the previous day's closing price. So if you have a short bias targeting this area, this is what tends to happen most of the time. So if there's a gap down, you want to have a bullish bias targeting that previous day's close or that previous session close, because 64% of the time, price will come up to reach that level. So here, I'm going to talk about one of our new features, which is the customization. This is very important. Right now, what this report is measuring is if the entire gap gets filled. So if price retraces completely back down to the previous day's close. But what if you want to see how often does it fill half of the gap, not the whole thing? What if you want to know how often does it fill 25% of the gap or 75% of the gap? That's what we've added here. So when you change the percentage here of the fill, so how often does it fill half of the gap? Let's change it. I'll just point out here that right now it's at roughly 60%. Let me change this to 50%, which means I want to look at how often does half of the gap get filled? So that would mean right here, just to give you guys the example very clearly, right now this move is roughly 12 points, let's just say, to make the numbers easy. How often will it reach 6 points? So here I'm going to make this yellow. How often is half of this gap going to fill? 80% of the time. So price will move halfway to the gap 80% of the time. So instead of targeting this area here, what you can do is target half the distance, and now your win rate is now 80%. Does that make sense?
Makes sense to me. That's very interesting.
Perfect.
The percentages of the gap fill, that's very cool. Very cool.
Yeah. So in this case, targeting, so what you're essentially doing is you're looking for a smaller move. So when you're expecting a smaller move, it's more likely for that move to happen. So in this case, you can see that the gap did fill, obviously, half of the gap. So this is something, if you have trouble holding onto your winners or holding onto runners, or trouble holding larger moves, you can say, well, I'll take a smaller move and my win rate will go up more, because obviously you can see that there have been a lot more instances where half of the gap has filled. So this is the customization that we've added. A lot of the reports that we have, the majority of them have some sort of customization where you can go in and kind of like play with what the report is actually measuring. The one thing that I'll mention is it translates across all of the reports here. So if I move to by weekday here, let me switch to the full standard here. You can see that if I go to Mondays, 77% of gaps down on Mondays have filled. So just to be specific to what this is saying, Friday closes at 100, Monday opens at 95. 77% of the time, Monday has come up to touch Friday's close. So let's change this to 50%. Now you can see 91% of the time in the entire last year, Monday has filled half of the gap to Friday's close. So you can play around with this and see, okay, well, I'd rather take a higher win rate and a smaller move. And this is exactly what you can do. You can kind of play around and change the inputs of the report. So that's one of the biggest things that we've added recently, is this customization. And this is really where you can start to elaborate on the reports that we have, and you could really make it personal to you and your trading style. Because if you have trouble holding on to your winners, this can be something that you can say is, okay, I'll target a smaller move and I can have a higher win rate over time. And this applies to our reports across the board. Before I move on, do we have any questions on the customization? I want to make sure that I didn't go through too quickly. I want to make sure I answer all the questions. There's just a lot to cover, so I want to make sure that I want to answer this, and then we can go to other things.
Yeah. A lot of people are saying great stuff.
Perfect.
They're really enjoying it. It's clear. One question we do have here is, are we able to adjust the gap meaning? So what he means by that is if the price opens outside previous day regular trading hours.
That was the next report that I was going to go into.
Cool.
All right,
Cool.
perfect.
So
Cool.
outside days is what that report is called. That's this one right here. This one is actually one of my favorite ones. So everyone is clear. Let me find a good example here. This is actually a pretty good example. I think there's a better one. Just for visual purposes, I'm trying to find oh, here it is. Okay. So what this report measures is for every time in the last year, price opened above yesterday's high, above yesterday's New York session high, how often will it reverse back down to touch yesterday's range, yesterday's high? How often, and that's a bullish outside day. A bearish outside day is the opposite. How often do we open below yesterday's low and we retrace back up to yesterday's low? So here's the example. What I'm going to do here, I'm going to click that, mark out yesterday's high right here. So I'm marking out yesterday's high. I'm going to mark out yesterday's low. You can very clearly see right here, we opened above yesterday's high, right? We opened above this yellow line. Now, 71% of the time in the last year, prices come back down to touch yesterday's high. So whenever you see this happening, this is a very good short entry and a very good short bias to have. It doesn't mean short at the open, it means find a good entry, of course, targeting the previous day's high. So typically you're going to see this happen and touch the previous day's high. The one thing that I'll say, and I don't have the data for, so we're going to build this report out actually, but I don't have the data for this, so please don't take my word for it. I only like to speak with stuff that I can back by the data, but typically this seems to be happening earlier in the morning. So within the first hour or two, you can see that if it's going to retrace, it probably will do it earlier in the morning. So that's one thing that if you're trading in the mornings, I mean, I personally like to trade more so in the mornings, you can expect this to happen earlier in the mornings. So this is actually one of my favorite reports. You can also look at this by weekday. So you can look at different weekdays. So you can see, wow, that's very interesting. So all the Fridays that have opened below Thursday's close have come up to touch Thursday's low. Sorry, all the Fridays that have opened below Thursday's low have come up to touch Thursday's low in the last year. So keep in mind, there aren't that many instances here. So the sample size is a little bit smaller, but it's happened every time so far. We also have the by close variant of this report. So what this is measuring is for every time that price does come down and touch yesterday's high, does it close above or does it close below this high? So what that means is, do you want to hold runners or do you want to target this area and have your full position cut off right here at the yesterday's high? And what you can see is when we open above, we actually tend to bounce and close above that high after it gets touched. So you don't actually want to hold runners throughout the day, targeting a larger move down. What you want to do is expect one of these, which is exactly what happened on this day. You do not want to be expecting a larger move down because over half the time, 55% of the time, prices closed above the previous high.
And that totally makes sense given how the business of gaps works. That's really cool. That is really cool. Wow.
Yeah. And again, if you guys have any ideas, we can always
we'll have tons.
Good.
We'll be bugging you like crazy. We've got a room.
That's what I want to hear.
Traders who have, like I've already got questions. How about, point of control stats? So we'll have to do what we'll do is I'd love to come in and talk to you guys about market profile.
Yeah.
And the practical uses of it. So you guys can start, putting that in the magical machine.
We actually have a report that we're building now around market profile, specifically around the value areas.
Cool.
So, or the value area high, the value area low.
Yeah.
So what that report's going to be is for every time that we open above the value area high, how often do we come back down? So yesterday, the value area high, how often does price come back down into that value area? And when we open below, how often does it come up back into that area? So that's one of the reports that we're going to have. And we can definitely introduce the point of control as well in that report. Sure. So to say like more customization of how often from when we open above the high, will we come back down to touch point of control?
That's really cool. But the way I teach market profile is the value area is basically just the cost basis, right?
Yeah, that makes sense.
So, so you'll have 3 days of cost basis that are overlapping. Then the market breaks out into distribution to get rid of that cost basis for profit. So this is really cool. So you and I will have to talk. I really look forward to it.
Good. That's very exciting. I love to always hear, because obviously, everyone has such a different perspective. Everyone has such a different trading style. Like personally for me, I like to trade options. I like to sell vertical spreads. It's something that I've just found a lot of consistency with. It's very stress-free for me. I know a lot of people that think options are very scary. And it's just nice to hear the different perspectives. And I get on the phone with a lot of people. So it's nice always. It helps me make the product better because now it caters to a lot more trading styles and a lot more concepts as a whole. So it's definitely interesting. So some of the other ones that I want to talk about is, so this is one of them that we've actually changed. I'm not sure if you guys look at the opening range. We actually just updated this report to show how often price will touch one side of the opening range. So that would be either the breakout or the breakdown. And then how often it touches both sides. So we updated the way this report works. And now you can see that throughout the entire day, you can expect the opening range. Let me just clean this up a little bit. And I'm going to go to our opening range breakout indicator, which automatically plots the first 15 minutes on each day. So you don't have to worry about doing it. So on every day, you'll have the opening 15 minutes. And you can see, like in this example here, price comes up, touches the opening range high, and then also comes back down to touch the opening range low. So those trending days, those days where price just continues, are a lot less frequent. So this would be one of them, where price comes down and never retraces to the high. You can see that that only happens in either case. Breakouts occur just under 20% of the time. Breakdowns occur. So in this case, this would be a breakdown. Or actually, sorry about that. This one actually did break to the top side. So let me try to find a different example. See, this one also broke to the other side. Let's try to find one quick. Well, they do actually happen very infrequently, which actually happened here. So you want to expect both sides of the orb to break. So this is something that actually we just opened a Discord, and we had some people in there yesterday saying, I used the double break to have a short bias yesterday after this move up. I'll just go to yesterday's trading. And they actually caught this move down because it broke the top side of the orb, and then they wanted to get short, targeting the other side of the orb, and that worked out beautifully here. Do you guys use the opening range at all?
Not really anymore.
Okay.
It was a big thing on that breakout trade. Some people do. I don't use it because I use the stops kind
Yeah.
of in the same way
Yeah.
for breakouts, but that's very cool too. Because a lot of people have trouble because really a breakout is a stop run, right?
Yeah.
When you break out higher, and then the wholesale's dumping into it versus whether it's actually got any continuation.
Yeah.
That's really cool to know.
Yeah. So just one thing I wanted to touch on is the opening range. It's a very, very popular report. I wasn't sure if you guys used it, but it is something that is very popular. I don't know, it seems, I know it's been around forever, but it seems to just be like recatching fire somehow. So we get a lot of comments. So I just wanted to make sure I touched on the new update. You can also go back to the previous version. So that would be throughout the day. So double break measures throughout the day, and then also same candle. That's how you'd go back to the previous version, is just go to that customization. You can also change the time frame of your orb. So 5 minutes, 15, 30. That would obviously change the results. Let me touch on some other reports here. The market session correlation report, I think, is very interesting, especially to futures traders. So now I'm going to go back into my trading view. I'm going to remove that orb, and I'm going to put on the London session. So you can see here, I have the New York and the London boxes checked. I'm going to hit OK. Now let's find a good example here. So right here is a pretty good example. And what this report is measuring is, for every time in the last year that London session has closed green, New York has also closed green 66% of the time. And now, just so you know, we're measuring green and red from the open to the close of the candle. So in this case, you can see this is a slightly green, still green, slightly green London session. New York session is also green. So something to keep in mind is if you want to have some additional bias on the day, you can say, okay, well, did London close green or red? If it closed green, maybe I want to be a little bit more bullish in my London session, in my New York session trading. Very interestingly, though, if the London session closes red, there's not really an edge there. So the edge really lies in this London closing green is where it is. Here, this is kind of more of a coin toss, not something that you can use for your trade ideas. We also have Tokyo and London. So if the Tokyo session closes in a certain direction, you can see for every time that Tokyo is closed green, again, that's where the edge lies. London is likely to close green. Then more of a coin toss here on Tokyo closing red. So that's one thing that I like to mention for futures traders. The other one that I'd like to talk about relating to market sessions is the market session breakout report. So London and New York, what this report measures is how often does New York break the London high or low, which means how often does it break one side? That happens 75% of the time. How often does New York break both London high and the low? Only 13% of the time in the last year. So once you see one side being broken, you do not want to expect price to come down and break the other side. In this case, you can see that it just continued higher. This report is very interesting because now you don't want to be targeting the opposite side of that London range. You want to expect more continuation or at least some consolidation, not a full move back to the other side. So actually, in this case, you can see the no breaks happened right here on this day. That means that price did not break either the high or the low. Also very unlikely. So what you want to do is you want to be targeting one side of the London range to be broken within this New York session, which means today. So in this case here. Any questions on that? Here's another example. Broke the high here, did not break the low. Let's look at another one. Broke the low, did not break the high. In this case, no breaks here, broke the low, did not break the high. So what you want to do and the way that you want to look at this is you have to wait until the London session closes, and then you can look for the New York session to start to break. So it will start based on the sessions that we have here at 11 a.m. Eastern time. That's when our London session closes. And then you can expect price to break out of one side because that happens 75% of the time. Any questions?
Nope, just more comments on
Perfect.
cool. Yep.
I can just keep going. If you guys want to just jump in and interrupt with questions, just feel free. So then I don't have to, like, just in case there's no questions.
Yeah, just go right ahead.
Perfect. That sounds great. So another one that I really like is the previous day's range. I'll actually go to the previous week's range. This one's actually very interesting. So here you can see that in the previous week's range, price, I'll just pull up an example here. So I'm going to show you guys how to do this. And again, looking at the New York session. So I want to look at last week's New York range. So let me just try to find a good example here. Okay, so this is Monday. So I'm going to mark out looking at Monday here. And we have an indicator for this. It's just we haven't released it yet. So it will be a lot easier for you to do this. Okay. So what I'm gonna do, this is what I'm considering last week, and this is what I'm considering this week. I mark out last week's low, and that's the New York low here. You can see that's the New York low, and then you can see the New York high is right here. So what I'm gonna do is I'm gonna mark out New York high. In the last year, 63% of the time we have touched the previous week's high. Obviously, we're in a bull market, so take that like this is obviously driven by that, but you can target the previous week's high, which you can see clearly didn't happen on Monday of last week, but it happened on Tuesday. Price touched Tuesday, and then it definitely happened on Wednesday. We broke that high. So in this case, you can take trades targeting the previous week's high. Previous week's low is a lot less likely. And then this is the really important one, in my opinion. These two right here. Touch previous week's high and the low. So what that would mean is price would come up, touch the previous week's high, and then come all the way back down and touch the low. So that is very unlikely. It's not probable for after price breaking one side for it to come all the way back down and break the other side in either direction. So if it touches the low first, you do not want to expect it to touch the high. If it touches the high first, you don't want to expect it to touch the low. So after it breaks one side, you do not want to target the other side. Very, very low probability here. Almost equally as low probability is for it to not touch either side. So in this case, if it just did this the whole week and then never broke out of the previous week's low or the previous week's high, very, very unlikely. So in this case, you want to be targeting one of the sides, but not both. That makes sense. So this is one that I really like in terms of framing your week, in terms of marking out your levels on Monday. you can say, or even on the weekends, you can say, this is my range, this is my previous week's range. Now I can kind of leave these plotted on my chart, and then I can target them as the day gets closer. If you're more of a day trader or a scalper, you can wait for price to get close to them. If you're a swing trader, you can start to position your trades to be catching that upward move towards the previous week's high. The crazy stat here is for every time in the last year, the previous week's high is broken, almost 80% of the time it has closed above that high, which has happened here, obviously. So when price breaks out to the high, and now I just switched to the by outside close report, or the variant of this previous week's range report. So again, I'm in the previous week's range report looking at the outside close variant. So here, price comes up. As soon as it breaks, very, very high probability that it will close above this area and not anywhere below this area here. So you want to expect price to close up here in this area somewhere above the previous week's high. Every time in the last year, 16 out of 16 times in the entire last year, that price has broken the previous week's low, it has closed above that low. So very interesting stuff. If price does this, you can definitely expect, or in the last year, it has happened every single time, price to come up and at least close above the previous week's low. So anywhere in this area here. So just above the low. So very, very crazy stat, honestly, is if we break the previous week's low, you can expect some sort of bounce, because in the last year, it has bounced every single time to close above this level. So again, all you have to do, mark out last week's high and low. In this case, this is what I did here. And I'll just do it again right now. I'll just start from scratch so you guys have a different example. So what I'm looking for here, you can see that this is Monday. So I'm going to just break off my Monday here. I'm going to go to Friday. So I'm going to mark out my Friday close here. And then now I'm going to mark out the high of the week, which is right here. I'm going to mark out the low of the week, which is right here. So you can see this is my range. Clearly, we broke previous week's high right here at this moment right now. And then we closed above that high. So this is what this report is saying. Okay, after we break each of these levels, what happens? Where does price tend to close? This is what you can use to figure that out. So the other one that I want to talk about.
Hey, Andre, maybe before you get to it, we got a couple questions.
Perfect, even better. Fantastic.
We got a question asking, how do you define a trend day?
How do I define a trend day? So in this case, is that specific? I have a follow-up question to you. Is that specific to anything that we've seen, or are you just talking about like one of these days where it just keeps going and going? Like in this case, where it just price keeps going up?
I guess how the software defines a trend day.
I want to ask another question back, is where did we talk about trend days?
I'm waiting for a response.
No, totally fine. This is a good question. Totally fine, because nothing in here is subjective. Nothing in here is, well, I think it's this or I think it's that. So this is exactly what this is measuring. The levels are here. Did it break? Did it not break? Did it close above? Did it close below? I'm curious about, I hope I didn't say anything that would imply that something along the lines, but I don't think that I've said anything so far that would relate to a trend day. I'm just curious what I said that sparked that.
Yeah, I'm still waiting. A little chatting going back and forth.
I think sorry, let me just jump in here.
Yeah.
I think what they're trying to figure out, because we have a long-standing joke in the futures room.
Yeah.
If the morning starts out strong, right? Some people in the first half hour will go, "Oh, it's going to be a trend day," and we have a joke that if you say it's going to be a trend day in the first half hour, you put a curse on it, and then we all short it. So it's like it's a joke that we have in the room, right? But
Yeah,
what they're talking about, because a market profile perspective, we use half-hour bars. So each
yeah.
half-hour bar for the first 4 or 5 periods, the lows are consistently higher, and then we get an inventory correction and then resume trend. I think
Yeah.
that's what they're talking about. In what context to the software? They're probably wondering, how many times we actually do get a trend day versus rotational days or
So
that kind of thing.
let me talk about a report here. This is in the volume report type. It's the volume and range by weekday. This is in my opinion, one of the most underrated reports in the entire platform. And this, in my opinion, very directly relates to trending days and choppy days, and how to identify each one. Now, unfortunately, this report specifically doesn't have any specific levels. It just gives you context. So what this report is measuring is the average volume and the average range by weekday. So you can see these blue bars are the average volume on a Monday through Friday. The white line is the average range. So clearly on ES, there's an uptrend as we go throughout the week. So what that you can see, obviously Monday has the lowest volume and range of the week. So low volume means choppier price action, not a lot of continuation, probably a lot of fake outs, very hard price action to trade. And then the low range means literally less meat on the bone, less opportunity. So very unlikely to have a trending day on a Monday because the volume is lower and the range is lower. Then you go later into the week, you have higher volume Wednesday, Thursday, Friday, higher range as well. What does that mean? Higher volume means likely more continuation, more momentum, cleaner price action to read. This is when the higher highs and higher highs and higher highs can form when there's more volume, when there's more range, pushing and stretching the price further and further. So when you see the higher range, highest being on Thursday and Friday, that literally means more meat on the bone, more opportunity, a larger high to the low of the day later in the week. So what I would say to you about trending days is much more likely to happen on a Wednesday through Friday, much less likely, very unlikely, to actually occur on a Monday and Tuesday. So an analogy that I really like to make about this report is, for those of you who experience the seasons, I'm not sure how many of you live in whatever climate, but for those of you who experience the seasons, in the summer, you wear your t-shirt and shorts, and that works well because you're aligned with the weather. You're aligned, it's warm outside, you wear your t-shirt and shorts, and that works. And because that works, you want to drag that into the winter. The weather changes though, so now your t-shirt and shorts no longer works. You need to put on a jacket and pants because you need to align to the weather. You don't control the weather and you don't control the markets. It's up to you to adapt to the environment that the days give you. So when you see lower volume, lower range on a report on Mondays, you need to reset your expectation of what the opportunity is for the day. You should not be expecting home runs on Mondays. They have the lowest volume and the lowest range of any weekday. You cannot expect, or you should not expect home runs on these days. Thursday and Friday, days where you can expect bigger moves. These are days where you can use more size maybe, or push out your profit targets a little bit more, or hold on to runners. But Mondays are not days where you want to do that. I'm going to show you another report that backs what I'm saying here very heavily. So I'm going to go to the buy. So this ATR report shows you how often price exceeds or stays within the ATR. So ATR is, we always use the daily time frame. So what this shows you is the average move on the day. ATR is just like the average high to the low of the day, just roughly speaking. So when price exceeds ATR, that means that price moved in excess or more than the average move, which would be defined as a trending day. When price stays below the ATR, that would be not a trending day, or just like a regular day or a choppy day. So right now for ES, the ATR is roughly $42. What's very interesting though, is you can see that roughly 60% of the time, price is going to stay within that ATR, which means the high to the low of the day will be less than this $42. Only 44% of the time, price will be $45 or $50 or 60 or 70 or 80. But when you look at this by weekday, the results are pretty crazy. So here on a Monday, 74% of Mondays in the last year have stayed within the ATR. So what that means is, again, reinforcing the smaller range, reinforcing the smaller and lower price action, less opportunity, because you're not going to expect price to break out of these bigger levels. Then you go later throughout the week, and you can see that Wednesdays, higher volume, higher range, tend to exceed this ATR. You go to Thursdays, same thing, tend to exceed this ATR. Let's go to Fridays, similar story. But when you look at Mondays and Tuesdays, very unlikely to exceed the ATR, which means, again, addressing this trend question, you do not want to expect trending days on Monday and Tuesday because it's just not the way that those days move. A lot of people like to say, well, I'm trading ES or I'm trading MES, it doesn't matter, I'm trading NQ, it literally doesn't matter what ticker it is, and it should behave the same every weekday. But that's actually absolutely not the case. The data shows that. And I'm sure a lot of you guys have experienced choppy price action on Mondays, and I'm assuming if you do have a worse performing day, it will be on a Monday, typically. It will likely not be later in the week. So if you look at your trading journals, I would imagine that Mondays or Tuesdays are your worst days because the actual opportunity that Mondays provide is very limited. So you need to be a lot more precise with your entries and your exits. You need to take profits where you can get them because typically you're not going to get these nice big moves that you see later in the week. Does that answer the question?
I believe it does. All right, next question we got here, Andre. Do you guys have a report for standard deviation?
So we've gotten a lot of questions about the standard deviation. I would like to ask, in what context? So is it the VWAP bands? Is it just pure standard deviation moves? Like how often does price? Well, actually, I want to ask first. The VWAP, is it VWAP? Is it Bollinger Bands? Is it
It looked like he was asking in the context of outside days or like opening range breakouts. Like he wants to see like I guess how far from standard -2 to +2 standard deviations.
Okay, that's something that we're looking to build. The difficult part about doing something like that, and I will just put in, I'm just going to pull this up quickly. I guess with the standard deviations, it might be a little bit different, but some people have been asking about how often does price stay within a certain standard deviation or a certain like range within like the regular price. So I'm just trying to find a good example here where price is just kind of like hugging these standard deviations. We don't have anything, the short answer is we don't have anything right now, but we're looking to build something. It's just a little bit harder for us to define it clear enough to where people can understand it and they know what exactly this is measuring, because there has to be a very objective measure of like, if it wicks outside of a certain range, that should count as a break, versus like some people want to see like, well, I want to see it close or I want to see something else. And that's where it becomes a lot more complicated. But yeah, I guess the short answer is no, but we're looking to do it.
Okay, great. I think that's it for now, guys. If I've missed any of your questions, put them back in. They've been a little chatting back and forth.
Perfect.
But yeah, go ahead. You could take it back over, Andre.
Perfect. Sounds good. So I know I'm not sure if you guys, well, actually, just before I go into it, do you guys use fair value gaps at all?
Some of them do, I don't, but some of them do.
Okay. So we do have a report for fair value gaps. We just added it recently, and I'll just go to the New York session, and it's not something that I personally use. This word, perfect. So it's not something that I personally use, But the way that this report works is it says if there is a fair value gap that's formed in a day, how often will price mitigate that fair value gap, and how often will it be unmitigated? So how often will price not retrace back through that level? So there's a customization here. You can see this by wick and by candle close through the fair value gap. So some people have different definitions. So in this case, the by wick one is one that I personally prefer. But if you look at, you can customize the time frames, like fair value gaps on different time frames. This one will show you is, okay, I see a fair value gap being formed. What are the odds that price comes back to that fair value gap today? So if there is one that forms, you can say if there is a very high chance on a 5-minute time frame that price will retrace back through it and mitigate that level, then I want to target a retracement back to that level. So 75% of the time and 76% of the time, you can expect price to reverse back through a bullish and bearish fair value gap. I wanted to touch on that very quickly. And the sample size here is actually very big in the last year. So we have 1,800 bullish fair value gaps and 1,600 bearish fair value gaps. So this is something that I know is very popular right now. So I just wanted to touch on it in case anyone did use these. So another one that I want to show you here is the high and low by weekday. This one, in my opinion, is very interesting. I will zoom out here a little bit so I can show you what I'm talking about. So here, okay. So I'm going to mark up my week again and that's the Monday. This is Friday. So I'm looking at this price action right here. This is 1 week. What this report shows is the highest points of the week here in this blue area and the lowest points of the week here in this black area. So the one I want to focus on here is this highest points of the week. You can see that the highest points of the week are most often on Friday and Thursday. So 38% of the time in the last year, Fridays have been the high of the week. 21% of the time in the last year, Thursdays have been the high of the week. Very importantly, only 10% of the time in the last year, Wednesdays have been the high of the week. So how do you use this? You can see this is Monday here, this is Tuesday. The moment that price breaks out on Wednesday to form a new high of the week on Wednesday, there is a very high chance. So what this means is, let's just pretend that this price action didn't exist. Let's look at this Monday, Tuesday, Wednesday. Now you can see Wednesday is the new high of the week. Now there is a very high certainty that price on Thursday or Friday will reclaim Wednesday's high to dethrone it as the high of the week. So you can see here, Thursday broke Wednesday's high, and again, Friday broke Thursday's high. So both of these days dethroned Wednesday as the high, which means that you can target a break of Wednesday's high whenever this setup forms to take Thursday or Friday a break of that high to make a new high of the week. Another really interesting thing is that on Mondays tend to be the lowest point of the week. So you can see that price will kind of tend to trend upwards as we go throughout the week. So Mondays are most frequently the low, and then Fridays are most frequently the high. So if you're a swing trader, kind of positioning your trades around something of this overall trend upwards, maybe Thursday will be the high, maybe Friday will be the high, just an upward trend as we go throughout the week. Another interesting one here is this filters by the colors of the weekly candles. So here I have selected the green, all the green weekly candles. You can see for every green week, 56% of the time, the high of the week has been on a Friday. And 53% of the time, the low of the week has been on a Monday. So if this week, if you have a bullish sentiment for this week, you want to be targeting the high of the week to be on a Friday. And you do not want to be targeting, obviously, the high of the week to be on a Monday. That has happened 0 times in the last year. Then you look at all the red weeks in the last year. You can see the highest point is on Mondays typically, and the lowest point is on Fridays. So bearish weeks tend to trend downwards from Monday to Friday. Bullish weeks tend to trend upwards from Monday to Friday. So really, those are the two outliers that you want to focus on is Monday and Friday. If you're bullish, you want to expect price to continue throughout the week. If you're bearish, you want to expect price to come down. Obviously, that might sound simple, but the more important piece is that typically you're not going to see a Tuesday or a Wednesday be the high of the week. So you can expect more continuation to the upside or to the downside later in that week. If that makes sense. So any questions on that? I know we have just a couple minutes here. Any questions on that? I want to make sure that I answer everything and that everyone here is like leaving with a good fresh perspective on how to look at some of these setups.
Yeah, I mean, I've got two questions. I mean, I'm gonna try and ask this one concise. I'm a little confused on what he's asking, but he's
Sure.
asking about average volume towards the open. So is that's something he's going to be able to filter through to help him make some decisions?
So
Um,
we have a
Rick,
market. Sorry, go ahead.
what was he asking, Ray? I
I'm
can't.
not. I guess he wants to see what the volume is at the open to help him make a decision whether he thinks it's going to be a choppy day or a trend day.
Oh, we have something for
Oh,
that.
oh,
Yeah,
cool.
the volume at the open directly to see how it will work out the day. Because I have seen that under 400K, when we open, we are mostly like choppy days. We have volatile open and so on. And I want to see the stats.
Oh, cool.
Perfect. So we actually have this report. It's in the volume report type right here, volume report type. You can see the market open volume indicator, not the sexiest name, I have to admit, but that's the report. And what this report shows is the correlation or the relationship between volume in the opening 15 minutes, and these are customizable, so you have the opening 5, 15, 30. So the opening 15-minute period to the volume in the rest of the day. These are the averages in the last year, so average volume in the first 15 minutes, average volume for the rest of the day, and you can see that the correlation between the two is very strong. So when you see higher than average volume, let's say you see 200,000 shares in the first 15 minutes here, so it'll be double the average, you can expect with very high certainty that the rest of the day will have higher than average volume. So that first 15-minute period will give you a very good window to the rest of the day, specifically with ES, because the correlation is so strong. So the opposite is also true here. If you see, let's say, 40,000 or 50,000 in volume in that first 15 minutes, you can expect with very high certainty that the rest of the day will have lower than average volume. Volume, as we just figured out in some of these other reports, is very highly correlated with range. So when you see higher volume, you can expect higher range, which means less choppy price action. When volume is low, you can expect choppy price action with a lower range. So the average volume here is close to 100,000. If you see above that, you can expect above average volume for the rest of the day. And if you see below, you can expect lower than average volume for the rest of the day. So correlates very nicely with the range that you can expect as well.
Can I ask another question? Have you the stats before the open, the volume before the RTH open? Have you stats like this? Can you?
We have it for stocks. We don't
No,
have
for futures, for yes, I mean, yeah.
No, we don't have. We have it for stocks. We don't have it for futures.
Oh, okay.
Because the futures pre-market would change. So like, what would you consider pre-market? Is it between anything from before the New York session open to the previous New York session close? So we have it only for stocks,
Oh, okay.
not for futures.
Oh, okay, okay.
Yeah. Any more questions? Hopefully I did a good job explaining this stuff.
Oh, hey, oh yeah, one more
Right.
question here.
Perfect.
You may have gone over it or not. I'm not sure, but someone wanted clarity on what the previous week's range is, or like how it's defined.
Yes, perfect. Very happy you asked. So all you have to do is you just look, so here's Monday, right? So this right here is Monday. You can see that by, I'm looking at this little area here. When I hover, it says Monday, 03 June 24. So that's Monday, June 3rd. What I'm going to do is I'm going to mark out just so I can like visually break out my weeks. I'm just going to do that. And then I'm going to look for the Friday. And we have an indicator for this. It's just, it hasn't released yet. So you won't actually have to do this yourself. It'll just be right in the suite of indicators that we have. But for this case, I'm going to do it. So then we have Friday and I'm going to do that. So this is 1 week of trading, right? So this is 1 week of trading. And then now I'm going to compare this week to this week. So now I'm going to do mark out last week's low. So now I'm looking at the New York session lows. Again, so I'm looking only at the New York sessions. So I'm looking at the New York session lows right here. I'm looking at the previous New York session high, which is right here. So I'm going to go, this was the Friday was the high. So I'm going to do that. And then now I'm looking at this week here. And now I want to be targeting a break of either the high, most likely the high, or this low. And it's always from the previous week, from Monday through Friday, that New York session range. So I'll just do it for this week currently, and so you guys can see exactly what's going on. You can put this on your charts as well. So today is Thursday. So, okay. So I'm going to mark out. This was the end of last week, and then this was the beginning of last week. So this is last week's range, Monday, Tuesday, Wednesday, Thursday, Friday. You can see that right here. And then I'm going to mark out the last week's high. Great example. I'm not referencing this price action. I'm referencing the New York high, which is made right here, not up here. So I'm going based off of the New York high right there. I'm going to go and mark the New York low, which happened to be on Monday. And now, so this is a very interesting week. We're sitting inside of last week's range. This is this week right now. So it would be very unlikely, and I'm not saying it's going to, I mean, it could obviously happen, but if you go to the previous week's range report, only less than 14% of the time will price not touch either the last week's high or the last week's low. So very unlikely that this is going to happen. I mean, it could happen. It's obviously seems to be setting up nicely right now of not touching either side, or we can expect a big move tomorrow to touch either the high or the low. But this is how you set up the previous week's range. All you have to do is look at the last week's high, last week's low. We're going to have the indicator that we're going to have. You're actually going to be able to customize what session high or low you want to look at. So if you switch to the London session, for example, obviously the stats are going to change. So, and then this, in this case, like the stats would change like this. So I'll just do this for you. So you'll be able to see that London high is here and London low is there. So now this is how it would change. So the indicator that we're going to do is automatically going to do this for you. So we're going to release that soon. So you won't have to actually worry about plotting this yourself. However, this is setting up to be a very interesting week because historically, what if it doesn't touch either? That's very unlikely. So does that answer the question about the previous week's range?
I believe it does.
Perfect.
Awesome. Awesome. Andre, appreciate your time, man. Oh, there is one more question. I
Perfect.
guess a little unrelated, but Steve's asking if you golf. He's recently caught the golf bug, so get us all out there on the course.
I have an extremely obsessive personality, and I have not touched it because I know that once I do, I'm going to start to obsess and I'm going to have to go all the time. And I can't do it. I've gone to the driving range a few times with my friends. I have zero experience. They taught me how to swing a club, which means that I'm very bad. But no, I have not, and I'm probably gonna hold off on it just for a few years, probably just because I need to focus on this here, and I need to make sure I'm making the most of every day, not at the golf, not at the driving range, or not at the
For sure.
clubs.
For sure. I can understand that. Yeah, it's an addicting game for sure. Once you get good into it, for sure. But Andre, thanks so much, man.
Of course.
For your time. Appreciate it again. Thanks everyone for joining, and we'll get the recording up here shortly. Everyone, have a good one.
Have a good one.
All right.